Welcome back to America's Commercial Real Estate Show. I am Michael Bull. This segment is brought to you by CAS, or CommercialAgentSuccess.com, for the ultimate commercial real estate broker training. Check it out, CommercialAgentSuccess.com. I know it's good because I created it. All right. So we're talking about apartments. We're talking about multifamily. Boy, it really has been a hot market. And I think some people are looking at, well, where are we in the market? Where are we in the cycle? You know, where are there opportunities? And what are some of the trends that are impacting multifamily to get the most out of your current properties? Well, as you know, I like to talk to analysts and economists. I also like to talk to people in the trenches, the brokers, the owners, the builders, developers in the sector. So please welcome my next guest. I have Derrick Barker here. He's managing partner with Civitas Communities, and he's in Studio One. Derrick, thanks for being with us.
Thanks for inviting me.
And we have Scott Spalding here, and he's with the apartment group at Bull Realty. Scott, thanks for being with us again.
Thank you for having me.
Well, guys, you guys are in the trenches. You're buying apartments. You're redeveloping them, sort of renovating them, right? And you're selling multifamily every day. How are you guys seeing the market today? Is it a seller's market, a buyer's market? You know, where are we trending?
From my perspective, it's certainly a seller's market.
Yeah.
It would seem. I mean, the pricing is just that we're getting from selling our properties are higher than what we expected, and so it seems like we're at the top. That being said, you know, there's still a lot of opportunities out there just with the strength of on the demand side because there's such a shortage.
Yeah, and you guys like to buy stuff that maybe needs some work that you can value add, right?
Right. So we buy properties that are effectively functionally obsolete. So high vacancy, you know, undervalued assets or underperforming assets, and we really go in and do deep rehabs to them and completely reposition them.
Sounds like my house. Can you buy my house then? That's my wife tells me. She does residential real estate. She comes home after seeing these mansions and says, Michael, you know our house is a piece of crap, right? No, it's not. It's pretty nice. Well, what do you see? Do you see the same thing in the market, Scott? Or?
Well, definitely from a buyer's perspective, there is a lack of inventory, which increases demand. You know, I'm seeing buyers, say, from my home state of California, that are selling their entire portfolio because of rent control and redirecting those funds throughout the Southeast with a focus here in Georgia. You know, also buyers are reworking their models and they're looking for patient capital so they can be more competitive. You know, from a seller standpoint, you know, there's a lot of activity. You know, there's a lot of smart sellers that are taking advantage of where we are in the cycle, and they're selling properties they thought they would never sell. I've been at a couple of closings, and then after the closing, the sellers actually pulled me to the side and said, we never thought that we were going to get this price. We never thought that this was going to close. So they were just elated. But on the other side of that, I do have some sellers that are looking to squeeze everything out of a property, and you know, they're really turning down some incredible offers. So I think they're going to be a little disappointed when they look back on this in a few years from now.
Well, that's interesting. So what are you guys seeing for financing these days? Are most of your deals being financed? Are lenders underwriting? How's that looking?
Well, from a financing standpoint, we're starting to see that lenders are requiring more skin in the game from the borrowers. On some properties, the equity requirements is anywhere between 25 and 30%, you know, as opposed to 20 and 25%, you know, in the past. It's kind of what we're seeing.
And for us, I mean, there's definitely a lot of capital out there. There's a lot of availability of financing, but rates are higher in terms of, I'd say lenders are still being pretty disciplined about the terms. So as Scott was saying, you know, you're putting in 25% equity for the types of deals that we're doing. But there's a lot of capital out there looking to be invested in multifamily.
And you guys that are in the apartment market every second of every day, how do you guys feel about the cycle and where we are in the cycle? Do you think there's a long runway left, or what do you think?
So I don't want to be talking my book here, but I do just think with where the economy is, that ultimately where we are is we're providing affordable housing that's affordable to the average people. Rents anywhere from, you know, let's say $850, around the $1,000 range, and there's room to go because there's just not enough of it. Really throughout, I'd say throughout the U.S. We haven't built enough rental housing for the way people are living in today's economy.
Yeah, I mean, that's a good point. We've built a lot of very expensive Class A, you know, luxury rentals, but we're not really building affordable housing, are we?
Right. And not only that, but we spent the past generation where the homeownership rate was way higher. So we have a lot of single family stock as far as just from a percentage basis, and a lot of affordable housing is just older. So
yeah. Well, one of the things I like about that part of the apartment sector is that it's harder to manage, right? So it's not for everybody that can get in and do the kind of properties you're doing. So some of the properties you're buying and redeveloping almost, are you taking them right down to the bare bones and renovating them?
We are. I mean, we're buying properties that are functionally obsolete and going in new plumbing, new electricity, everything.
Wow. So, it seems like all the buyers I hear from is like, I just want something to do a little bit of light value add. I want to replace the counters,
There's space for that too.
Yeah, that's pretty good. So what are you seeing from buyers today, Scott? Are they how are they feeling about the market? Are they more eager? Are they more cautious?
Well, we're seeing a tremendous amount of demand from buyers. It just seems like we can't get enough inventory. We have a lot of buyers from across the country that want to invest in Atlanta, largely due to the job market that's here. We have mild winters. We have a great airport. So there's just a tremendous amount of demand. I wish I just had a warehouse of opportunities because the phone doesn't stop ringing.
All right. Well, I'll go.
The one thing that would be a concern, if there is any, is interest rates. I mean, their interest rates are creeping up. We're seeing that from the debt quotes we're getting back. That they're actually, but rents are also going up. And with the recent tax legislation, there's a lot of capital. There's a lot of capital out there willing to, I think, take lower returns. And that's a little bit of what we're seeing from our investors a little bit also, is that we don't need to be getting the same returns that we were getting 2 or 3 years ago, and which is good because it's tougher to find those deals. Yeah,
so their expectations have adjusted with the trends, and that makes sense. So are there any other headwinds, any other things that worry you in the business, either one of you or some of the buyers or sellers you're talking to, Scott?
Well, I don't say that anything just concerns me. Like we mentioned, interest rates are creeping up, which are compressing values. But outside of that, from a broker's seat, I mean, there's nothing that really worries me because, like I said, demand is just so strong.
Mm-hmm. Yeah. So nothing else. There's like in the markets you work, there's no rent control. There's no supply dwindling of tenants because you're not in that Class A market where affordability is an issue, right?
Right, but there is construction costs, and that's a lot of what we do. And construction materials are going up, with trade policy and just with the construction boom and labor. We have a really tight labor market, so we've seen construction prices go up a lot, and that really has caused us to walk away from a couple of deals that a year ago we definitely could have done. That would be another thing that we consider.
Well, that's interesting. So it does, I guess, a couple of things. Keeps some deals from penciling out, but at the same time, I guess it helps values of existing properties because there's less competition, right?
Right.
Exactly.
Right.
It's kind of an interesting problem. Well, we're going to take a short break, but we have a treat for you. We're going to talk about some trends in use of apartments and marketing of apartments in multifamily that I think you'll find interesting. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.